Well, I think the test of time has been that excessive sell-off that took place just 2 weeks ago was really just a correction, because 2 weeks later, stock markets are moving back towards their record highs. And I also think that if you look at the US inflation reading that came in last week, it dipped below that psychological 3% level that's been stubborn for some time. That seems to have signed, sealed, and delivered the envelope that the Federal Reserve, the US Central Bank, are set to cut US interest rates as early as next month in September. We still have two major event risks this week: the FOMC minutes, which is going to be the minutes from the last Federal Reserve US Central Bank meeting. And at the end of the week, we are scheduled to hear from Fed Chair Jerome Powell. But as long as this US Central Bank continues to indicate that they're looking to cut interest rates, not only in September next month, but also potentially a further interest rate cut towards the end of the year, it does seem that it's going to still be ready, set, go for financial markets to continue to enjoy the news of low interest rates. And this has been a rally now that's been in place since November of last year. So it does appear to be that lower interest rate bank policy worldwide has been the key ingredient to what has been stronger stock markets, and has also supported gold prices hitting their new all-time highs also.
Yeah, so would you put your house then on a Federal Reserve cut then coming very, very soon?
I don't own a house myself, but I think that investors have put all their hats onto the table, because you have the Fed watch tools are pretty much at 100%. They've been at 100% probability thereabouts now since before the US inflation reading. And again, it comes down to the guidance that the central bank, including Fed Chair Jerome Powell, has now provided since late 2023, that the intention of the US central bank is to cut interest rates in 2024. The irony is that we were expecting the Fed to start this train journey of lower interest rate policy this year. But in fact, they haven't even got on board the station yet, because you have the European Central Bank have cut interest rates, the Bank of England have cut interest rates, and some of the other developed central banks too. But the market is very much now anticipating the Fed are set to move next month. And considering we've already delayed projections from May until June, it'll be a tremendous shock if the Fed do not move next month. And the only thing that I think can prevent them from moving is we have some sort of external shock in financial markets geopolitically. But generally speaking, investors are completely set, and they would put their house on the market that they will cut interest rates next month. Look at the probabilities.
Right. So with that interest rate cut and this, would you say temporary or more long-term sustained drop in volatility in the environment, in the markets, would you say now is a good time for investors?
Well, price never lies. That's one of the key themes that we learn in technical analysis and as client education as a trader as well. It seems that the market is ready now to go to new all-time highs. And although we've already had, if we look at the S&P 500 over the first half of this year, it hit more than 30 all-time highs. But looking at financial markets, it does seem like they're ready to hit another all-time high. And we've seen this again, not just in global markets, but in other asset classes too. For example, gold price continuing to enjoy the news of lower interest rate policy. And up until the central banks are ready to support that party, and looking at the narrative, they're not ready to support that party at all, they're actually going to join it, then there's no reason to say that actually we're going to see a dip in stock markets. The most recent sell-off was just a correction. And it was actually just an opportunity to buy at discounts that investors have jumped on, because they were concerned that the price sentiment was going to change. That sell-off that we saw 2 weeks ago, which was unprecedented volatility, that would have led to a fallen knife scenario where investors would have continued to take profits on stocks. Instead, they've done anything but they've actually just bought it at a discount. So I would say to you, yes, there is no stopping this rally as we speak now.